Testing one, two. Good morning. Good morning. Awesome. All right. A bit of a lower turnout here this morning. Setting up my stuff and we'll be good to go. Good stuff. Good stuff. All right, guys. I guess we'll get started. Gave 5 minutes for everybody to tune in. Welcome to episode 4 of today's risk management, position sizing, trade execution, and exit strategy workshop. Today's going to be a bit more of a simple one, straightforward, not much to apply here. The only thing that's you're going to require is a bit of patience and an overall idea on something you have very high conviction in. I have a number of examples I think we could talk about from years and years ago, all the way into 2021 cycle and even 2017 cycle. So without further ado, let's get started. This is going to be covering dollar cost averaging, pretty much executing a longer term idea over a series of days, practically even weeks, maybe even months, depending on your conviction, your overall belief, and anything along those lines. So it's going to be a lot less about timing exactly the perfect entry. There's going to be a lot less surrounding a trader's mindset, if you would say, an intraday trader's mindset, and more focused on the speculator, the quote-unquote investor, the quote-unquote macro trader, the one that spots a narrative or a thesis way in advance, but has no idea how to enter, has no idea whether they'll get the best possible buy for their buck, and overall just believes in an area or idea, right? So without further ado, let us begin. And again, this is going to be treated more for the spot holders. This is going to be more for the ones with a long-term conviction in something. It's less on the side and realm of trading, but I feel the need to cover it nonetheless. So this might resonate with some of you, especially with the cycle that is coming up. You guys have overall really, really bullish ideas or strong convictions on certain pairings, but of course the chop or the downtrending or the indecision is causing you to fudge yourself out, or at the very least question your convictions. So I'm here to provide you with a very, very straightforward raw strategy. It's something you see in traditional investing, legacy markets, and TradFi, right? This is going to be very, very straightforward. I assume everybody can apply it to their day-to-day spot allocations, and that's what it's here for, essentially, right? So as you guys could probably tell, the past 2 weeks have been absolutely bananas. A lot of people have been messaging me, telling me, "Hey, I feel like I missed the whole move already. I'm stuck waiting for a pullback. I have no idea what to do, and I feel rather lost. Am I done?" And I'm here to tell you that that's furthest from the case. Myself applies this daily dollar cost average strategy almost on an everyday basis. The bigger your portfolio is, the more calculated and precise you're going to need to be. And naturally, an area that is very competitive, like a nice retest or a dip buy, in a very, very parabolic market, you're going to realize it's not as easy as it sounds, right? When you're coming from a bear market and you're hearing about all the good old days and wow, every day prices went up 30%, 40%, and trading a bull market is genius season and everybody can do it. Well, by now, I want to assume that you guys got hit with a bit of a reality check, and it's the reality is it's not so simple. And sometimes when a market is moving really quickly, you feel rather stuck and you feel like there's no entry point. So realistically, how do we combat this, right? How do we combat this from being, a retail Ryan, a limit down Larry, like how do we avoid, these common traps? And it's very, very straightforward. So again, if you guys are thinking this is going to be a complex, how do I say, a complex strategy, it's anything but. In fact, I would say it's probably the entry level strategy. It's for people that don't have the time to trade every day. They don't have the time to check their charts every 15 minutes. They have a job. They have a budget. They have an overall belief or a conviction on something, but their trading expertise might not be fully there. Their comfort with a market might not be, how do I say it, as familiar as someone like myself or someone like Eli or someone like John that does this day in, day out, pretty much has 12 hours a day to stare at charts. So this one's not for people that do. It's more for the people that go to work every day, don't have the time to look at charts, but have the time to strategize on a longer time frame. Even though they might not know the technical bottoms, they may not be able to decipher exactly the exact moment of entry, which by the way is a fool's game. Nobody actually knows. There are times where you're granted opportunities, but what's important is that you have an overall exposure to the idea that is not only over risk, but it's calculated. It's over a series of days. It does not have to be, you do not have to be in a market where you need to be right here before the leg up, before the expansion. You don't need to be right here. If you keep trying this over a series of months, you're going to find yourself getting chopped to bits, and there's nothing worse than the death by 1,000 cuts. We can all assume that. How many times did all of us try to play a breakout here, and we end up getting burned, right? Overall, in a 60 to 70K area, I think the best course of action here would have been whether you have a daily DCA strategy, a weekly DCA strategy, even a monthly DCA strategy. I think, overall, most people in hindsight would have said, damn, if I would have just bought little by little, week by week throughout this whole 7 month range, I would have had a nice cluster of bids somewhere in the middle here. I would have gotten, fair bids down here. I would have maybe even hit the top a couple of times, but overall, the expansion was caught, right? How many of you guys feel like in this past 7 months, assuming you've been here this long, because we do have new members, retail, does enter the door when things get exciting. But I'm assuming for the ones that have been here for the past 7 months, they've seen a range like this. They've tried to time it. Maybe they got lucky a couple of times, getting a trade from here to here, here to here. But a lot of the times found themselves, long in the middle of the range, and just getting chopped to bits, right? They're paying fees, they're indecisive, they have no conviction whatsoever. Naturally, how do we avoid this? How do we avoid this? Even though we have the overall understanding that, hey, this market's bullish and about 6-7 months from now, we should be at way higher prices. The downside is you can never tell exactly when that moment kicks off. And the upside is that when it does happen, it's a really good feeling. But most of the time, you're going to find yourself giving away small little amounts. Before you know it, it's chipping away at your portfolio. Not only that, it's questioning your conviction. It plays a role on your mind. And the last thing we want to do as traders is to pollute the mind with uncertainty, doubt, and a lack of conviction and an otherwise strong idea, right? So I'm going to bring up a couple of examples here because DCA is something I understand very well. It's something I had to learn in the 2021 bull market. My size got much bigger. My positions became way more obvious, and for that reason, I was hunted. I was hunted a lot, whether I like to admit it or not. But trying to pop $1 million orders on a specific price point can lead to someone calling your bluff. And if you guys play with a smaller size, you're going to realize that this might not pertain to you, but there are people in here that do have sizes of 100,000, 500,000, 1 million, and they're playing in illiquid market caps, like secondary pairings, right? Where the market cap is not the size of Bitcoin, it's not the size of Ethereum, it's not the size of Solana, and you think that a market is so big that well, they couldn't possibly hunt my $150,000 position. Well, guess again, right? What you do on the order books is a footprint and can absolutely be spotted either by algorithms, market makers, and those that understand order flow and mechanical trading very, very well. And although they have no idea that you might close out or stop yourself out or even FUD yourself out, they still have the upper hand to call that bluff. So again, if you're someone with bigger size, this might apply to you. If you're someone with not a lot of time on your hands, this might apply to you. And if you're, most importantly, not familiar with markets, but have an overall sense of bullishness surrounding the space, this one will apply to you. And I like to think that the best thing we've ever seen is the 3K bottom back in 2017, and once again the 2022 bottom at 16K, right? So naturally, when we look at a market like this, right, when we're bottomed out, or we assume, a market shouldn't be trading at this place, it seems irrational. 70%, 80% drawdowns. You'll see this a lot on alts. I'll go over a couple of those if you guys do want me to take a look at it. But naturally, in 2022, right, 28,000 was at least seen to me on a mathematical level that 28,000 seemed irrational to break from, right? So naturally, right? When I'm building a larger position, or when I have an overall idea that this is way undervalued, this is irrational to be trading here, but given the circumstances. Let me provide you guys with a bit of lore and a bit of nuance to what happened during this entire time period. Um, for those of you that were there, you can imagine what I'm about to explain. FTX had blown up, Luna had gone insolvent, and what followed was a series of contagion. So a lot of bubbling up underneath the surface that nobody was really able to tell, aside from very, very, very few people with tons of insight, and a bit of a hunch at the same time. So a lot of people had strong belief that this area over here was our bottom, and realistically, it made no sense unless there were to be something very, very sinister cooking on the books, right? So naturally, when this did happen, a lot of people were left, dumbfounded, caught off guard. Some even lost it all through no fault of their own, and it created a very, very, how do I say this? A very, very depressing market period. It's where all the trust was lost, all the months and months and years of hard work out the door from a couple of bad actors, and in a time like this, I know in hindsight it seems a lot easier said than done, knowing where we trade today. But in this moment, you have to provide the emotional context that most people were going through, and some people had lost their funds on an exchange. Some of them had strong conviction at 28 to 36K, and the sub 20K prices absolutely devastated them. In fact, it probably even made them feel a bit crazy, delusional, and they really did start to second guess themselves. I'm no victim to this. 20 to 16K was extremely difficult to maintain my DCA strategy, and although I had strong belief, it all it takes is something out of pocket, or how do I say, something that you weren't anticipating to completely turn that 24/7, right? So with that context being said, how did I apply a strategy that did not expect to catch the bottom, but overall expected to catch from 28 to 16K, the most irrational of prices in recent history, all the way down to COVID 2020, which I'll cover in just a second? What was my strategy here? Knowing that it could have taken months to resolve. Contagion, it goes on and on and on and on without any clear insight to when it could stop. We have no idea of the damage that's done after an FTX exchange blows up. We have no idea of the damage done, who was exposed to it, who may have had money invested with FTX. And these are big market makers. These are big institutions, pensions. You had no idea who could have been involved in it. And it's always after the fact, right, that we end up finding out. Despite this, having a strong conviction in something, how did I approach this, right? Well, for arbitrary speaking and arbitrary examples, I had, let's say, roughly around $1 million, right, that I wanted to aggressively DCA into over a period of time, right? So naturally, this is going to come as one, two, buckle my shoe for a lot of you guys. I imagine most of you guys went to school. You understand math to a certain extent. It's nothing quantitative. It's nothing mathematical on a sense of a university level. It's practically basic math. What do you guys think I did here? Knowing that I already had a strong position built from the 36 to 20K, 8K area, right? Because my thesis was, well, that's got to be the low of our cycle unless something were to happen. So when this was presented to me, my only strategy was, well, there's no telling how low this actually goes, but if I know anything about this pairing or anything about this asset, is that these prices will eventually never be seen again. So we assumed that we had $1 million to play with, right? Or we can even be, even more simple. We could say we had $10,000 to play with. We had an overall belief in the overall area, right? So with that being said, this $1 million, right? Let's say, for hypothetically speaking, right, and this is actually a real example of my own. I had an idea that, okay, so our bear market has arrived. We are, I want to say, 2 years away from a halving cycle, which is usually where we start to see things pick up. What is my approach? Knowing that in this whole moment, news will come out, fear will be at its highest, optimism will be at its lowest, but overall, the conviction and belief is that if Bitcoin's not trading at zero, its destined path is to the upside. So, with this being said, it's as simple as taking a digit, something like $100,000, right? Whatever you're willing to allocate, right? Because not everybody's going to have the same amount of size. So this is about plugging in the math into your own specific portfolio. And in this case, I use a number like $1 million, right? Let's say I had a 6-month outlook on this. How am I, over the course of 6 months, going to get the best possible price for something like this? Now, there are a number of ways to go about it. What I think to be less effective, especially in a fast-moving market like crypto, is some people will look to DCA or apply over a course of 6 months. They'll divide 6 by 1,000,000, right? And they'll allocate at the end of every month, no matter what the price is, that specific amount. Now, this is more of a legacy TradFi outlook. In reality, it was more like a 6-month outlook. So we took that $1 million, right, and we applied it on a day-to-day strategy. So what did we do? We took that $1 million, right? We took those. What's 6 months of fucking what's 6 months in terms of days? It's 30 times 6, right? So again, roughly around 100 days, right? 180 days. Specifically 180 days. So we took that million, right? And we divided it by 180 days. So naturally, every single goddamn day that we were in this range, instead of buying $1 million all up front and allowing myself to be fucking nervous about it, knowing that price is gonna, probably drop to 16K, probably go back up to 20, probably go back down to 24, heightened fears and emotions will be all over the place. New news will come out and we can no longer tell where the technical bottom is. What did we do? We took that $1 million, we gave ourselves a 6-month time course or a 3-month time course, depending on how you want to do. In that case, if it was a 3-month time frame, we were adding $10,000 a day for 90 days. And if we did a 6-month outlook, we added $5,500 a day for 180 days. Now, what did that do to my position, right? Knowing that some days I bought at 24, some days I bought at 16, some days I bought at 22, some days I bought at 21, some days I bought at 25, some days I bought at 28. My average over this course ended up being somewhere in the smack middle of it all, right? So what is, it's quite literally the sense of the term, guys. When you do not know, but you have an overall conviction or an idea, and again, this applies to the context that we just explained, right? At the time, it wasn't so simple. At a bear market, it's never so obvious. The lows can go on for way longer than you can anticipate, way longer than your mental state can imagine. And for that reason, it's better, right? In these situations, when you have an overall belief on something and you believe something to be severely undervalued, in this case, right? We're talking about a 70% drawdown here. We're talking about a 77 to 80% drawdown, which is the traditional market bottom. Now again, I'm not just picking an area because I believe my own beliefs. It's because traditionally it's what I've seen every single goddamn time, right? If we go back to all previous cycle highs, my drawdown area is somewhere between the 70 to 85% drawdown. This is a traditional and typical crypto correction. It's a typical crypto market low, and it's something I've stuck to. So again, when I started to see, right, that we were already 60% down in the market environment that we were in with the open avenues and the corporate interest and Tesla buying and all these speculations coming afoot and all the market cap that we've amassed, naturally my idea was to, well, I need to start buying here. The problem is I don't know what's underneath the surface, and I don't know how bad the situation is, but I do know that once it's all said and done, Bitcoin will continue to do what it's always done. And that's buy and sell at the price it's demanded at, right? Flushing out the leverage is not something that is part of its fundamentals. It's bad actors that have tried to outsmart a mathematical certainty. So again, when we started to hit the 70 to 75% drawdown area, naturally my brain was thinking the worst. We're human beings. It's emotions. It's normal to assume this. Right? Like we start to second guess ourselves. We start to doubt ourselves. The news is actually much worse than we could have ever possibly anticipated. But it's at these moments where the opportunity is most ripe. And I'm sure you guys have seen this. It's always after extremely bad news and extremely bad headlines where how much realistically, how much worse can it possibly get? So naturally, when you're in this environment, when you're in this position, the last thing I want to do is spoil a good idea because I entered too soon, or I entered in a position I actually have no conviction in. On a technical basis, it made realistically no sense to try and time it. Instead, it just made sense to buy out the average of this entire area over a 6-month period, 3-month period, or 9-month period, whatever period you deem it to be. Right? That goes based on your own intuition, your own conviction, and your own due diligence. Right? Every alt cycle and BDC cycle is going to respond more or less the same, but at the same time, trying to be perfect in a market like this is going to be very, very, very difficult. You're going to find yourself being very, very frustrated with the price swings. So what did I do? I had an overall idea. I had an overall allocation that I was comfortable with speculating with. In this case, bigger sizes for different people and smaller sizes for other people, right? But overall, I treat it the same way as anybody else. At the end of the day, I couldn't actually tell where our low was. I could imagine where it was, but was I going to take $1 million bet on that one overall idea? No. No, it's foolish to assume that. Not only does this put stress on myself, if there is a better opportunity, well, guess what? I have no more ammo in the clip. I have no more ammo in the clip, and now I'm looking at lower prices, wishing I did something else about it, right? So instead of being Limit Larry, I decided to be DCA Daryl, right? DCA Daryl's a friend of mine. He's a guy that likes to buy over long periods of time and sell for much, much, much higher, right? Limit Larry, he works better in a trending market. He works better in a market that pretty much tells you where it's going. All you need to do is when the time comes to limit in, right? In this environment, Limit Larry doesn't really win much fights, right? He's you know, his moment in the sun, was during the uptrend. During the downtrend, Limit Larry's going to suffer a lot, and we don't want to be Limit Larry, right? We want to be DCA Daryl. Okay? So, with this context, this lore, and this insight provided, we took $1 million, right? And we're speaking arbitrarily. And took $1 million. We had an overall belief that over this next 6 months, these prices, technically, according to my analysis, according to my conviction, according to my fundamental understanding, and according to my research, 6 months from now, these drops should get more and more and more shallow. So we took that million. We gave ourselves 6 months to allocate the same amount every day. And again, it doesn't have to be every day. It could be every week. It could be every week. It all depends on your overall conviction and your time and your outlook of it, right? With this being understood, everybody's beliefs, ideas, and convictions are going to be different. In this case, this particular case, we took ourselves with a 6-month average. We took $1 million. We divided it by 180, and that was my daily allocation every single day, regardless of the price. Now, you could be more specific. Some people like to buy at different points in the day. Some people like to apply the strategy on every New York open, on every New York close, because they feel for whatever reason that's the low of the day, or that's the high of the day, or whatever reason it gives them the best bang for their buck, and it's the most consistent and it's the most realistic outlook. In this case, I chose to pick the same time every day, 12 o'clock at noon, $5,555 goes in to BDC. And I completed that every single day for 6 months. This could be any position size. Again, it has nothing to do with my story. It has to do with your story, your size, and your conviction, right? But what's important is instead in an environment trying to time a top and a bottom, we overall just had belief in the idea that anything below 28K is nonsensical, it's not mathematically accurate, and the only thing that can cause such a price drop is something we don't know about, or something truly, truly sinister that would not participate with traditional market behaviors. And wouldn't you know, we found out FTX blew up, they gambled with everybody's money, they ran away with it, Celsius was invested in it, Luna's returns were much like a Ponzi scheme, and it was inevitable that it would blow up. Well, guess what? FTX was involved in Luna and invested in Luna. Celsius was involved in Luna and invested in Luna. Pension funds were involved in Luna. Guess what happened? Everybody imploded, right? So the understanding was that anything under 28K at this moment in time had to be something that wasn't being told to the public, and we found out about it way later on. So overall, this idea over here was that, well, assuming this market doesn't go to zero, this is going to be the best bang for my buck over the next 6 to 7 months while contagion and the dust settles. And in return, right, over the 6 months average period, instead of worrying about price being at 16K and about price being at 28K, we're just worried about getting the overall best average of where we can assume the middle ground is. Because it's not about trading the micro moves here. We're trading for a longer term. If we're giving ourselves 6 months to expect a move, then we're not concerned about how it performs in a month from now or 2 months from now. We're concerned about how it performs way into the future. So again, this is going to come down to the discretion of the people watching this video. It's not about timing everything perfectly. It's about giving yourself an allocated time that makes sense with your expectations in the future. Now, in this case, time has went on and it ended up working out. Hindsight is 2020. But in that moment, it's not as easy as it sounds, right? There's no telling, oh my God, will we actually leg up? Is there anything else we don't know about? What's important is in the moment of a really, really good idea, the last thing you want to do is try to chop and trade as if it's not a good idea. Does that make sense? I know I've been talking for a while. I haven't seen many comments, so I just want to make sure that I'm not just rambling and that people are understanding the vision on this. Beautiful. And I will go into another example here, but it's a relatively short lesson today. It's simple. It's simple. It's straightforward. I had a question about mathematical point of view about why BDC at 28K was cheap. The Gen, this will take away from the lesson itself. So if you want to message me later on, I'll be more than happy to explain why I believe on a mathematical basis or a mathematical understanding that 28K was nonsensical to be trading below. So we'll talk about that later. Now that you guys understand the basic concepts, I gave you guys a real life story, my own personal story, and a story that everybody else was going through. I want to go through more relevant ideas today. And of course, guys, if you thought, if you thought I didn't apply this strategy anywhere else, obviously I was a much smaller baby fish during the 3K days. And of course, we averaged down in the 6K area too back then. But for 6K to drop to 3K, naturally, what's the drawdown on that? If I was buying at 6K, right? If I averaged in at 6K over here and it dropped to 3K, that's a 50% drawdown, right? Not only would that liquidate almost every player on a leveraged position, it would also fucking FUD out a lot of people that otherwise thought 6K was cheap. So again, the DCA strategy is going to come into big effect here because as long as you have an overall idea and conviction, right, on an overall move, the idea of lower prices doesn't sound too bad to you anymore. It actually sounds kind of good. The lower the price, the better the average, right? So it's important, right? Especially for you alt guys and you speculators, right? I understand the trading aspect of things is fun, right? But in a time where a market is yet to fire off and has yet to start trending, although you have an overall belief on something, it is better to strategize yourself over the course of these next couple months as we enter those phases and to have a better position overall instead of stressing yourself out over the rotation of which preparing to play, when to time it. This is going to drive you mad. It's going to make you lose touch of reality. And the last thing you want to do in this market is flip-flop around, chop yourself to bits, and not have any conviction on anything. Because as you guys can probably see by now, it's the ones with the max conviction in things that they picked months ago that are starting to pay off now. And there are still a ton of pairings that have yet to do this. And it's only the ones that have the conviction in this current environment that will be able to manage themselves, kick their feet back on their desk and say, well, I'm in from so much lower that realistically will take something extremely drastic for me to change my outlook. Do we understand this? Do we understand the current market environment? It's awfully similar, to what we've seen in the past time and time again, is that it's not ready to kick off yet, but it's showing signs of life and it will kick off eventually. So instead of trying to time it, instead of trying to be a clout chaser or someone that's just ready to catch the Tico bottom like they're in a Hollywood movie, what is the most realistic way to go about this? So I want someone to give me an example here, just so I could throw any sort of arbitrary example onto one of your pairings. If someone wants to give me one that they have a high conviction belief in, that I can sort of say, you know what, I agree with you. I expect this to move out. If anybody has one, Ethereum and Sol, these are great, 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 great examples. Let's go to Solana because it's something I have exposure to, right? Now, Solana, another very, 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 very interesting pairing, right? Um, excuse me. Naturally, we look at this. Sorry about that. Naturally, we look at this, right? And we see awful similarities here. Awful similarities. There is a slight discrepancy between Solana and Bitcoin, but more or less, I'm going to flicker between both of them. And you tell me what you guys see. And I want you guys to participate because I need to understand that you guys see what I'm seeing, okay? I'm going to flicker between both. So there you go. Now, does anybody know what the slight discrepancy is between the both of them? Out of the two, what's the slight discrepancy here about where they currently trade at on their overall time frame? I'm gonna pick your brains here a bit. There's one thing that separates Bitcoin from Solana in this current environment, despite them looking identical. Yes, one is leading. BTC has a bigger breakout, but what's the significance here? Beautiful, beautiful. So you guys are observant. You guys are on the punchline. You guys do understand. That's exactly right. Solana is not at all-time high. Bitcoin is, right? So there is slight discrepancies here. Now, if you have an overall belief, and I know a lot of you guys do, I know a lot of you guys are part of the Solana ecosystem, and a lot of you guys have made your fortunes and have been introduced to the market on Solana. We are in 2024. It's not 2016 anymore. Bitcoin doesn't have the mainstream media's attention, or at least the new market participants are always looking for the thing that they consider to be extremely undervalued. There is a slight discrepancy here, is that Solana is nowhere near. It's actually, I'm going to say it's actually quite near its all-time highs, but what's important is it's nowhere near price discovery, right? In the sense that we're not there yet. So knowing what you know about phase one, knowing what you know about phase two, knowing that that if we go look at our top 5 or top 6 or top 10, Solana is no joke at this point. I can consider it almost a blue chip in this current market environment. Knowing what we just talked about not knowing when to expect the breakout, but knowing that this area overall should be seen as way higher in the future, right? Would you guys have been better off? And this one's a bit more easier, right? I was able to buy at 130, but it's not about my own journey. It's about giving you the overall understanding of what we're doing here. I was able to limit into this, and my idea was to limit in lower. Now again, in a perfect world of trading, I would have been able to get my $100 zone. I would have been able to get my 130 zone, and I would have had an average somewhere over here, which is way underneath the average of price we see today. What's important here is to understand that if you have an overall conviction and an idea, now again, it's a bit more past its prime here in the sense that its prime opportunity to average in the price that's doing otherwise nothing has started to break out. What's important here is to understand one thing and one thing alone. You guys will talk to me about how you expect Solana to be at all-time highs, practically even double its price once it enters price discovery. Hell, I hear some people talking about 4-digit Solana. It reminds me a lot of Ethereum back in 2016 and 2020, where a lot of people had high conviction in the same idea, but instead of just believing in the idea and believing that whatever and how long or however long it takes to overall make this move, you guys for some reason, and I'm not speaking about all of you and I'm not here to insult you, it's just you guys for some reason have this idea that well, if I'm caught up here and I'm caught in the middle here, well my idea is wrong and I need to get out. Well, what kind of conviction is that for an overall long-term idea? If you're in a market that is showing you that market cap is growing day after day, right? Money's on the rise, Stables are on the downfall, which suggests capital inflow into a speculative market with total market cap rising, right? ETF inflows out the wazoo. You have everything you need to assume that, well, fuck, if it's anything like any other market cycle, we assume, because based on your conviction, and again, this is not me telling you what I think is going to happen. It's what you guys tell me you think is going to happen. So the same way I treat Bitcoin as a certainty, if you have this same conviction, what does it matter if you buy at 176 or between 130? Why is your strategy as a spot buyer trying to time the peak or bottom so you guys can stare at your P&L? Or is it because you want the best possible price without affecting your overall conviction? How are you going to do that? Let's go back to what we just talked about. A lot of you guys, you want the peak or bottoms, but you have an overall belief on a very strong idea, but for some reason, just because you have to buy a bit higher on an overall idea you have conviction in, for some reason that spooks you out. So where's the conviction, right? And I'll tell you what it is. It's a lot of the times you want to be able to put more money than you can actually afford on an overall good idea, and your focus is on timing the bottom or timing the lowest possible price instead of just trying to snag the overall area that you deem to be undervalued. Does this make sense to people? I've given myself a line here. There's no coincidence to why this 155 line is here. It's because I believe it to be the median of this entire range. But knowing exactly the fact that I cannot time the exact breakout, and I'm no victim, I'm not impervious to this, right? If you guys were here all the way back in March, I had strong belief that this would just continue in a parabolic trend. So I made a limit buy over here, right? I was very, very lucky and fortunate to do so. But what ended up happening was I could have seen this roll over and I would have shaken myself out of my bag. I would have seen this again, right? And thought it might have been going lower. I would have seen this again and could have been shaken out of my bag. I could have probably taken profit. In most cases, you are not going to time the exact moment, the exact breakout on an idea that requires months and months and months to come to fruition. What would have been my best strategy here overall, instead of just allocating all that I was willing to allocate and hoping for lower later? What would have been my best course of strategy here? Would have just been every single goddamn day, I just look to buy a bit. I look to buy a bit. Instead of throwing my $500,000 on Solana in one go and stressing myself out over 6 to 7 months with opportunity cost, because as traders, being stuck in a trade for 6 to 7 months can start to be less lucrative than just overall buying an idea slowly but surely. Wasting all your ammo and allocation. What if it went more down now? Now I'm in big trouble, right? Now I'm in big trouble because I have prices I do deem to be even more valuable, but I'm already locked in off one idea. Instead, I could have just been allocating over a 3 to 6 month period, right? In hindsight's 2020, we all understand this, but I would have given myself a period to just dollar cost that same amount I put in over here, but over the course of whatever. So that if it did come down here, well, I got buys on those. And if it did go up here, well, I got buys on those too. Somewhere in the middle, my overall conviction, not only is it not as tested because I'm not put in a position where I need to expect it to perform from a certain level. I just accept the price for what it is and know that eventually I expect it to be higher in the future. This is for the person that does not have 24 hours a day to look at charts. They have a full-time job, they have a family, they have kids to take care of, they have kids to pick up after work, they have responsibilities, they have obligations. Some of you guys are students, you got time to be on your screen. Some of you guys have jobs where it's very lenient, you can take a look at your charts. Some people do not have this. Instead, they just got to trust their overall idea and understand that timing tops and bottoms is a fool game. My idea is that this, with new money coming in, my thesis, right? My thesis, new money coming in, speculation from retail will increase. This is going to be seen as relatively cheap to them. I think we're so far away from our all-time highs, but I have strong belief that whatever's being consolidated here has to move up in the future. So instead of trying to time the peak or bottom, potentially missing the play, or trying to time the breakout, potentially getting stuck in a play and having to see lower prices that you wish you would have capitalized on otherwise, my best course of action for the speculator or someone that is taking a long-term swing on a spot position, not leverage, is to dollar cost average in. Does this make sense to everybody? I just gave you guys a real life example of what I think will happen to Solana in the future. And again, because you have conviction in this overall idea, the fact that it goes away from here right now is great, right? It's great. But if it doesn't, well, guess what? Okay, we're just chopping around a bit more. We still have overall conviction in the idea, and we're not so scared anymore. We're not longing the breakout here, and then we're scared when it goes back to prices we've seen for the past 7, 8 months. We understand what phase we're in. We're in phase one. Phase 2 and 3 will come, which means we do expect money to flow into these things. Now, is every trade going to be right? Absolutely not. Things happen. Bad news happens. Policies change. Regulations change. News comes to light. So knowing what we know, right, that trading is anything but a perfect game, we have a conviction on an idea and we have an associated risk with said idea, right? So there's going to be things that you're going to have to invalidate on. That comes up to you, right? But we do understand that our overall thesis, knowing that in months from now we expect it to be much higher, double its valuation, right? People expect it to be double its valuation. I know I do. I expect Solana to be somewhere towards $400, and I think I'm being conservative. I think I'm being very conservative with the market that we're being approached with. Could it go even higher? Absolutely. But what's important is I have an overall conviction in this idea that it's considered undervalued, at least to my basic understanding. So assuming you have the same thing, your course of action to time it is what I just said. You give yourself an allocated time. And sometimes you can allocate over the course of 3 months and it ends up ranging for 4 months. It happens. That's trading. I mistimed a bunch of things this cycle, but I kept it. You want to know why? Because I didn't put myself all in one basket and hope and pray that something performs the way I need it to. And with that being said, I like to think I covered 2 examples that are very, very relatable. And I'd like to take the rest of this time to go over anything that may have not been well understood. We'll have a little bit of an open session for the next 15 minutes. I know trading days have been getting a bit more exciting and we're moving much quicker. So I do not want to take I don't want to take too much time going into New York session. If I'm not mistaken, we do have a stream starting. Okay, no, we got some time. So again, we got about. I'll continue to take questions here. We can go over anything we've learned over the past 2 weeks, and we can also discuss what has happened here. If you guys struggle with the mental state and things about wavering and faltering on positions you already have, we could talk about that as well. I'm an open book for this last session. So if there's any questions, I encourage you to ask them. Don't be shy. There's no such thing as stupid questions. We're here to learn. So again, nobody's going to judge you. There are people that have been training here for 4 years. There have been people that have been training here for 3 months. Hell, for some of them, it's their first week. Now's the time to ask questions. Aerosmert says, how do you know when to start taking profits? You would need to see a dramatic or significant change in market cap. You would need to see something significant that would suggest profit taking across the board. Usually what we technically see is price moves faster and faster and faster. We're talking 15, 20% a day. And then all of a sudden, within 15 minutes to an hour or even 3 hours, it just drops like a rock. We're talking 30% or more. And that's when we know, okay, we've hit a substantial wall. And then what you'll technically see, and I'll just draw it over here just so you guys have context. We'll see something like this, right? A parabola goes like this. And that's usually when you're in a bullish cycle. A parabola goes like this. And then it goes like that. Right? You'll see this and you'll go, okay, so we dropped off. We're in price discovery, traditional correction zone. What's really important is how we respond as we approach these highs again. And a lot of the times you're going to see this in parabolic markets is that we blow off top. That's the top. It's very rare you're going to get those prices again. And when instead the important thing to look at is it's a significant weakness from that moment on. And once you see this structure and we're talking parabolic, and we're talking like 2x, 3x, 4x, 5x, it's market cap. That's when when this structure presents itself that the party's probably over for a bit. And if you haven't locked in profits by then, I think something's wrong with your brain and you're being stubborn. Okay? So again, the second you start to see a parabola increase like this, where the consolidation like this gets faster and faster, and then it goes like this, that's usually the sign that, hey, I think we've hit our potential here. Because the way a market works is that people rush and rush and rush. They get more and more and more confident until it's past the point of no return. And then those people that are really overconfident never see those prices again. So it's all hypothetical. We need to see it as it goes along. There are a ton of new avenues, there are a ton of new metrics to consider with ETF inflows. The truth is, we don't know. When we're in price discovery, we don't know. So a lot of the times, if you find yourself going, wow, I can't believe it's at this price, shave a bit off. The same way you dollar cost averaged in, right? We're going to apply the same to taking profit, right? We're not going to try and time the top. That's a fool's game. Instead, we're going to look at price. We're going to be like, wow, I made a significant amount off these buys 3 months, 7 months ago. Maybe I should pay myself a bit here. And if it continues to go up, well, that's great. You reallocate, and not you reallocate. You re-strategize when you do get to a price where you're going, wow, I can't believe it's this high, right? So I hope that answers your question. It's all hypothetical in the price discovery market. We're just going to have to. What's important is that the same way you DCA'd in, knowing that you can never possibly tell how long this can go on for, how low it could possibly go, but you have an overall belief in something, the same way you should be paying yourself as things go along, right? What I like to do in markets like this is when my money is made back, I like to eliminate my risk. I like to play with house money. I don't like to play with my own money, especially after it's done a significant move. Even pay half of myself back before letting it go. It all depends on your risk parameters, how much conviction you have in an idea, et cetera, et cetera. I find it a challenge to accept that we are in phase one mentally. What's hard to accept about it? It's every cycle we've ever seen since time immemorial. It's every cycle we've ever seen. What are some fundamental things you look for to have a max conviction in a coin? These are a number of things. Now, I don't have max conviction in a lot of these things, but I do have max conviction in the nature of crypto cycles. So that's where my conviction is going to come from. Usually, the conviction starts with Bitcoin doing what it always does, and then following that, right? Money must flow somewhere else. So if I'm getting the fact that my market cap is skyrocketing, that how do I go about this? If I get the fact that my market is skyrocketing, if I get into the fact that previous cycles align with the same expectations I had or have for this one, it all depends, right? Like when I'm looking for a max conviction coin, it's less about the specific project itself and more about the overall market nature of crypto, of our market cycle. So fundamental values for specific coins, it's going to be rare you're going to hear me see those because till this day, I see no real use case for any of them. But I do understand the nature of market cycles and I do understand the nature of raising USD valuations. So I understand that a lot of people have these beliefs and things. And the last thing I want to do is be stubborn in the face of people that will buy. So my conviction comes more from the fact that Bitcoin does exactly what I need it to do. And with that comes speculation into other pairings. So first and foremost, my conviction always comes from our leader of our market cap. If that's going to grow, then I expect a lot of these from where they're currently trading to grow as well. Will they hit all-time highs? I'm not in the business of determining that. But I do understand that money must rotate and distribute, and it will find narratives, and people, all they need is a narrative. So that's where my fundamental belief comes from. You talk about long-term conviction and sticking to your bias, but what if the fundamentals of a project change? Like with FET, for example, I see my conviction fade away since the merger. Again, there are things we cannot predict. And like I said at the start of this stream, that just because you have a max conviction in something and just because you DCA into something over the course of years does not mean that things cannot go bust. It does not mean that you cannot be wrong, right? What we're doing is we're managing an expectation on an overall belief, and we're allowing ourselves to hold that conviction, assuming nothing changes. So knowing what you know, you're in a market, risk is always a part of it, and that needs to be accepted. So your due diligence comes from your conviction, right? Your conviction comes from your due diligence, and your due diligence needs to be absolutely spot on. There's a reason why I only like to allocate into BTC is because it's a mathematical certainty. Now, there are other things, right, that suggest a lot of optimism, but can flip on a dime, right? Because they are meant to solve different things. Alt markets and other things solve different things. For me, when it comes to Ethereum and Solana, I have a bit more of a leniency with them for the simple fact that I believe that people build on them. and that people need to use Solana, need to use Ethereum to shuffle around other pairings. They need these things. So in a way, I don't see oil, right, as this scarce resource. I think we have tons of it. But at the same time, I understand that that can affect the price. I understand that people need it every fucking day. Does it mean that it will become obsolete in the near future because of energy resource changes? You know, that's not up to me to decide. But at the same time, I take it day by day, and unless something were to change, I just assume people need Ethereum. People will need Solana if they want to operate on the rest of these pairings. So I hope that makes sense. Like Bitcoin is in a realm of its own because it poses a mathematical certainty of being sound money, right? And its growth and attention to the space of the real world has only grown since then. So my conviction grows ever stronger. That it's very, very hard to assume that this can change, because no matter how many times they've tried to, it just stands in defiance and continues to do that. Now for Solana and Ethereum, as the space grows, so do their participants. From 2016, from when I first entered, all the way into 2024, we used to have 2,000 altcoins. Now we have onwards of how many now? 2.4 fucking million. Excuse my language. There will always be a use case for these two. Will they become obsolete? I mean, we're starting to see the signs of this in Ethereum, where people kind of go, move aside, old man. Solana's the new hot shit. So these things are in competition with one another, and that needs to be understood. Is that they both try to provide the same thing, more or less, and the tech, as we can see by now, doesn't really matter. It's about what the people recognize and what they want. The market decides what the people decide what the market. How do I say this? The market only does what the people want it to do, right? It's not the market. It's not the product that decides its usefulness. It's the people. The market only provides you an avenue for that. I hope that's understood. Could you quickly talk about the psychology behind the fact that even if the portfolio is up $2,000, it's so hurtful to see it down 100 the day after, and not to consider the long term? I know you have talked about this earlier, and you also recommended a book on this way back. Crypto Lang, it's an excellent question. When you are seeing money that is unrealized, naturally, like a lottery winner, right, or like a lottery ticket player, they start to extrapolate, on all the things they could do with the money that's currently in their account, and then they'll wake up the next morning, they'll see 20% down, and now all of a sudden they're back to, not wanting to spend $3 on the shipping fee. They're back to conservative mindset. The truth is, it comes down to conviction. It comes down to having expectations that are both realistic and calculated. How to put this into perspective? It's very difficult, right? Because money's going to matter differently to everybody, right? For someone like me, $200, $100 down could be just a small trade in fees and execution. To me, it realistically, in my trading journey or my trading operations, it means realistically nothing. To someone else, it's 10% of their portfolio, it's 5% of their portfolio, and that's a huge gain. It's a huge gain. But the problem is does your belief match the gain that you're infatuated with? If you had an overall belief that something should be worth 200, 300% more, then a 5% drop doesn't really matter now, does it? So again, it comes down to reflecting on your own expectations, your own conviction, your own how do I say this? Your own, like, your how do I think I just said it, really. Your own convictions and your own expectation. It comes down to having a realistic outcome here. If you're expecting 200 to 300% on a pairing and you have strong conviction in that, 5% down on your portfolio should not affect you. It's a long-term game. If you're intraday trading and you're up 5% on the day, and like, 5% is a lot for intraday trading. It's an intraday strategy. It's an intraday outlook. So 5% up on the day, you don't want to wake up tomorrow down 10%. That would be like, fuck. But a long-term conviction where you're expecting 2x, 3x, or significant growth in something, 5% should just be another day in the office. So that needs to be understood. Do I expect a 70 to 80% drawdown again, even if maybe the US established a strategic reserve EC? That's a good question. I don't know anymore. We have ETF inflows, accredited investors, corporate interest, national interest, political interest. It's hard to say if 70 to 80% will ever be given again, but based on past experiences, I've also said the same thing, and I was wrong. So it's the 70 to 80% where I start to sweat because I always think that this cycle, there's no possible way that nobody would find it this undervalued to not want to scoop it up. But then again, 2022 was an exception because we had a really, really malicious and bad actor, almost on a political scale with his political ties, where it seemed almost deliberate to do what was done. And that's the only reason why we were 70 to 80% down, is that a lot of people were meant to trust this person. And we're not just talking retail. We're talking about fucking Tom Brady here. We're talking about Celsius. We're talking about pension funds. We're talking about this guy being on the face of every commercial, on the face of football stadiums, being a celebrity, hanging with celebrities. This guy was put there as a bad actor on almost deliberately, and that 70 to 80% drawdown would have never existed. And that's why my belief of the 28K mathematical certainty, it was irrational to assume it had to be like almost like someone gambled with everybody's money. And wouldn't you know, that's exactly what happened. So do I believe cycles will become much, much more competitive? The 70 to 80% drawdown zone at this moment in time seems rather unrealistic. I would say the answer is yes. But then again, 2022 proved me wrong, 2020 proved me wrong, and so did 2018. So with that being said, that's my overall belief. And that's, Tommy, I want to get to that because that's a very interesting one. Mario Bro says, it's my first full cycle, started May 2021, so seem mostly bear. Now that we are all-time highs every day, could be the top. That sounds more like disbelief. I don't think we're in euphoria because this same sentiment is exactly what will take us higher, in my opinion. I don't see people calling me a retard, excuse the language for anybody that offends. I don't see people calling me stupid or delusional for taking profit after a 40% move. They go, oh, good call. This is going to drop. You know you're at the top when people that have never traded before, or people that are in their first cycle or have been doing this for 2 months, went on a hot streak, start telling people that have been here for 8 years that they're stupid for doing what they did. Okay? Sentiment is going to play a big role here. I'll give you an example. I was on Twitter the other day, and I'll naturally bold post. I'm pretty euphoric on the BDC posting and stuff, and I get very excited. But one thing I've noticed is my engagement is incredibly low. It's the melancholic ones. It's the ones that promise a doomsday scenario where the engagement is so high. It's almost like the real hated rally here is Bitcoin. Is that everybody expects it to pull back because I believe it's now priced out of retail. It's people that could be working 5 years full salary and still can't buy a full coin. Like it's starting to show. It's starting to show that like everybody begs for a pullback, and it's like it seems more likely that people are sidelined / in disbelief. The word is disbelief. It's like they can't believe that it's up here right now. They can't believe it. It's like, how is it not pulled back? How is it not giving me my chance to get in? Truth is, it has. It's just doing what it always did. So again, I don't think you're at the all-time highs. I don't think it's even begun. I don't even think you've broken the previous market cap highs, and we still have to price in $90,000 Bitcoin. So again, that being said, I don't think this is the top. I think you can get corrections, traditional corrections, 20 to 30%, like we've seen in the range months ago. We broke a new high here. We broke a new high at 73,000. We corrected 33%. Guess what happened? We broke new highs. We had our first real correction here. And I want to say at this moment in time, it's very, very similar to 2020 right here. Right? Am I not mistaken? It's more like we're right here. If you want me to be honest, it's more like we're right here. This is where I feel like we're at in the whole overall bull cycle of this. Oh yeah, look, November 2020 to December 2020. I feel like we're right here, if I'm being honest with you. Tommy J.E. says, what if this new bad guy could be Sailor next bear market? No one would think it could be possible. Tommy, this is an interesting topic because I do believe that. I believe he's leveraged plays, but at the same time, how do I explain this? At the same time, we tried to hunt him in 2022. But the guy has, at this current moment in time, a mathematical formula that just allows him to borrow more and more and more to hedge his position. And now it gets harder and harder to assume he's the bad actor because he's amassed so much Bitcoin at this point that he's almost untouchable. But I do understand the argument, and I did have a reason. I did have a feeling that they were trying to hunt Sailor in 2022. The problem is, we're dealing with a rocket scientist here that is applying trading with math, and I do think he understands something that we don't. As much as I want to understand, I think he understands how to borrow against BDC, and the more and more he amasses, the more and more influence and power he has over the market itself, and he can always collateralize any significant drawdown. So I do like the take. I do like the take. I think it's very, very reasonable and logical. The problem is, as time goes on more and the more influence and allocation he has, the harder and harder it is to assume someone could do that to him now. But that's a very good observation. I like how you're thinking. Bigger players are in command now. Do you feel that money might not flow into alts and they extract their profits to pay their customers? Again, you just have to take this phase as phase one. It's literally how it's gone every single time since I've been here. This disbelief into alts is exactly why it'll eventually have its moment in the sun. You cannot expect something to move when there's too much belief around it. It's when everybody assumes it can't happen anymore. It's the psychology of a market. It's not going to reward a mentality everybody thinks it's due. It's when everybody has given up. It's the same thing with Bitcoin. It's the same thing with alts. It's when everybody gives up on a narrative, that's when it starts to move. How long do I think this bull run will last? Just related to 2020. Try to see it the same as 2020. It's the only data I have to go off of. The only data I have to go off of is the previous cycles. So again, we're in price discovery now. It's a new market, new ETF inflows, but more or less the same. It's followed traditionally the same way, more or less. Don't you think the ETFs are changing the game for alts? In a way, yes. In a way, yes, they are. But does it mean that I don't think ETF Ethereum inflows have been picking up? They have been. Do I think they can't perform? Again, retail is something of it's another dragon that, and again, I don't get in the face of mass buying. I've seen speculation starting. Do I know for sure? No, but I'm going to go based on how I've treated every market cycle where I also didn't believe an alt cycle was possible. And then wouldn't you know? Right? Again, it comes down to convictions, due diligence. Everybody's going to have their different beliefs. We're all traders here. We're all traders. We're all speculators. We all see things differently. I personally believe in the nature of market cycles. I think if people can extract as much money as they can in exchange for Bitcoin, because that's who your big players are, I think they'll do that. If they're going to let a price run to 30, 40% so they can spend the next 8 months selling on people that think it's due another rally, then I think they'll do that. You have to understand the most money is made from extracting from alts after they let it run for 6 months. They let it go up 600, 700%, and they spend the next 3 years just selling on every hope and dream all the way back down to a 90% drawdown. They squeeze every dollar out of this market before they allow it to continue. So you have to think more like a bigger player here. The bigger player makes more money distributing to you than they do letting price run away for a bit. This is letting the fish get away with it, and then reeling them in. You get them in, you get them hooked. You get them hooked with the idea that they can never lose, right? They get cockier and cockier. They use bigger and bigger size they never thought they would do, and then boom, it starts like this, and then the complacency starts, and then they're chasing, and then the distributor is just doing business as usual. They'll do this for years and years and years and years and years until you're either out of money, put more into it, or have given up entirely, which allows them to buy when you're no longer there. Do you get the nature of bigger players? Do you see how they think? They don't make money on the way up. They let you run away like a fish that thinks it's got its bait. And then they spend the next 8 to 9 months just shuffling you, chopping you, killing you. And then when you have the prime opportunity, you're not there anymore. You're not there anymore. They are. They're the only ones. Not only did they fucking completely take everything you have, they're also going to buy the prices that you couldn't afford. Does this make sense? I hope I put that in the right perspective for you guys. As a big player, I forget to teach that side of things. A bigger player is not making money on these moves. They don't give a fuck about this. Right now, they're selling to you. That's what you have to understand. In any other market, when a market's rallying like this, they're taking a bit, right? When we take a look at BTC USD longs, what has happened? The biggest players in the space play on Bitfinex. What's happened to their leverage longs? They're starting to unwind. Coincidence? I don't think so. They long the entire way, right? If we go look at 2021 all the way to here, makes a lot of sense. I hope that makes sense. With that being said, I think we've covered a lot. This has been an hour and 10 minutes, this class. I like to think we discovered or discussed a lot of the DCA stuff, and we answered a lot of interesting questions today. You guys have your head in the right places. You're doing a lot of good things, and you're asking the right questions. And if there's nothing else, we are about 19 minutes away from New York Open. I expect things to get a bit more rampant here. And if there's nothing else to talk about, I'd just like to do a couple plugins, if you guys don't mind. I don't know if you guys all have my role selected, but if you ever want to stay updated, with my corner and what I post, this could be anything from market psychology to trade setups to when I go live, to data metrics and studying flow and how a market's leaning. This can help you with your bias, your convictions. I do invite you to go to what I just posted in the chat below. Select my role. It's a little alien emoji. You stay up to date with what I'm posting. You get a notification for every time I use the tag, and I try not to spam it. I try to only provide meaningful insight, and it helps me out greatly. It shows that there's interest in the space and what I'm doing here. And with that being said, that's really the only plug I have to use. No ref link shills. I don't need your money. If I do see people that I believe have a ton of potential, I tend to work with them a much closer level on a DM basis. It's because I see something in you that I might see in myself, or I see a specific way of thinking that I think is unique, and I want to pick at it more. I do my best to accommodate everybody, but of course, I am fascinated by those that have a different way of thinking about things. But at the same time, I do invite anybody that has questions about what I teach, how long I've been here, what do I do, how do I operate, to please message me. I'll never message you first to avoid scammers. But if you guys do have questions, if you guys are too shy and to participate in the chat, and you don't want me to address you in a group of 100 people or more, I invite you to always message me privately. I'll get back to you within a reasonable time frame. And that being said, I think we're going to end this class off here. I see another question, like 65 to 68% dominance. The truth is, it's gone a bit higher than I think I would have expected it to. And that's just what comes with new paradigms, ETF inflows, and people only having specific avenues. Where do I expect this to top? I mean, I assume it's got to be soon. I don't know, but at the same time, I don't really care, because eventually it will have to come back down. Markets speculate, markets rotate, and that's just the nature of it. And my BTC outlook, I'll cover that in the corner. I'll give a good write-up for that. But with that being said, guys, class is adjourned. The session is now over. I want to wish you guys a very, very fantastic New York trade session. Hopefully we get some things pop off across the board. And yeah, I'll see you guys in the Discord. Thank you for joining. Hopefully you guys learned something. And again, this will be recorded. So for those of you who couldn't pay full attention, those of you that couldn't make it for the full class, stay tuned. The recording will be available later. And as always, I'll see you guys next time. Take care now.